Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast Show. I'm Andy.
I'm Brian.
And I'm Will.
And today is all about the insurance crisis in California, guys, how it's affecting everyone here. We have a number of articles up, why insurance companies are pulling out of California and Florida, and how to fix some of the underlying problems, limited home insurance options in California as major carriers pull back, California lawmakers failed to fix the insurance market, so what comes next, and senators take up looming insurance crisis as policy issuers flee Florida and California. First article right out the gate, guys. The nation's number 1 and number 4 property and casualty insurance companies, State Farm and Allstate, are gone. They are gone. Bye-bye. See you, California, and thanks for watching our show.
Hey, but the commercials are still going.
Oh, yeah, because they're going to still insure whatever else they can. But for property, you guys, they are gone. I mean, in summary, you're talking about multi-billion-dollar disasters that have been happening, of course, in lots of parts of the country, but specifically because of California, you got earthquakes. We hear about mudslides when it actually does rain, and then of course you have fires and wildfires, and so this is all adding up.
Yeah.
So one of the things I read was that California is a very particular state, which comes hand in hand whenever we have one disaster, another one's right behind it. So, I mean, that along with a whole bunch of other stuff is really pushing the needle on, people leaving the insurance space. And then a lot of our clients will suffer from that as well. So,
yeah, no, absolutely.
Definitely keep
these
in mind.
wildfires that we have are just uncontrollable.
Yeah.
And then the cost, right? When we're talking about San Diego medium sales price is $890, man, that just takes it up a big notch.
Yeah.
So we got that. And then let's not forget, guys, the most important, our state laws.
Yeah. Yeah.
It doesn't allow insurance companies to be that profitable.
Yeah, there is an issue because you have to kind of petition to increase rates, and one of the things I was reading in preparation for today's show was that while inflation costs and build costs have dramatically increased by 20, 30, and 40% depending on material type or labor or how you're going to quote averages. If you have to petition to even just make a 7% rate hike to policy premium, but then that could take even 6 months to take effect, you have this like lagging decision making process. You're like chasing this catch-up provision, which means you really got to be sitting on a lot of cash.
Yeah, absolutely. And building right now, it takes time.
Yeah.
You're trying to get your permits and all that stuff takes time. Just because your house was there and it got burned down doesn't mean that it's going to go back up right away. You have to go through the same process like anybody else will. And that's one of the biggest issues that we're facing right now in California because of the whole ADU, the SB 9, SB 10 rule being passed. We're starting to see a delay on all these permits.
Yeah, there's actually a couple of years ago, and this isn't as relevant today as it was maybe 4 or 5 years ago when it happened, but a neighbor down my street in my other neighborhood, their house burned down, caught fire, had a fire in the garage from the water heater, of all things, the water heater. But the house burned down, and it was 5 months before the demo even started. And then they were out of their house for another 8 months after that. So they actually were out of the neighborhood for 13 months, which is not only just a replacement cost of the home itself, but also putting that family into a temporary housing and covering that while their house was being rebuilt and all those timelines were in place.
Wow, that's crazy. We should have brought him on the show.
Yeah, well, that was a hard day to watch. Literally stand there and watch their house just completely go up in flames.
Yeah.
Even the fire department was doing their job, but by the time they got there, it was half gone already.
That's crazy.
One of the things that stood out for me was the cost of reinsurance going up higher. So I read right here that says reinsurance costs have been rising fast in response to expensive disasters around the world in recent years. Reinsurers' risk-adjusted property catastrophes rose 33% on average at their June 1st, 2023 renewal. So that means that 33% just for insurance on insurance basically went up. So that, along with the cost of rebuilding with the cost of insurance for insurance going higher, now gets tacked into the whole mix.
And that 33% is on top of the previous year's 25% increase. So you had a 25% increase and then a 33% increase on top of that.
What was on top of that?
So, yeah, I know, right? That's like just stacking that cost of reinsurance. And then again, that just that brings up the question of the solvency issue with insurance companies. Maintaining their solvency is why reinsurance exists, is so that they don't necessarily have to go belly up when there's are massive claims that have to be paid out. Yeah. But then that puts pressure on even the reinsurers. Are there reinsurers for reinsurers that reinsure reinsurers? I don't even know. That's a good question. If you're a reinsurer of reinsurers,
it's kind of like Peter Piper picked a pack of pickled peppers, right? But hey, Brian, at least on a positive note, they renewed it.
Yeah.
Right.
Yeah.
I seriously, this week alone, I got 2 texts from clients saying, "Hey, Will, do you know of any insurance companies that you can recommend because my company would not renew.
Yeah.
Wow.
That's not cool.
So further in the article, they speak about that where there's a law in place that says that the insurers can't change or cancel your or not renew your policy within 1 year of the law that was stated here in California. But I mean, you never know. It might have been 2 years already since they last bought, but they do have that provision from the government that allows them for 1 year to basically figure it out after they stop writing those policies.
Got it. I did not know that. That's good. That's good information.
And that story right there is going to be a recurring story, not only through 2023, but into 2024, because it does not look like insurers are coming back to California with any sort of haste or speed. Just some of the insurers that have left California recently account for 21% of the policies that are covering the state's properties right now, or of the properties that are insured. State Farm, Allstate, Farmers, that accounts for like 21%. And that's a lot. And so the state will have to do something from a policy perspective, to your point, to eventually incentivize them to come back. But there also has to be the financial, I mean, it's kind of like there's a political willingness. Okay, that's one part. But then there has to be a financial benefit for them to do that. And I'm not necessarily taking a side here, but it does feel right now that we're at this gridlock moment. And I honestly don't see a way out of it yet based on what I've read here.
Yeah, absolutely.
No, and it's tough because, I mean, you see a lot of people that get squeezed out because they're not able to get that insurance. And it's really tough because then what do you do when there's no big insurer to be able to, secure your property? And that's some of the problems that some, prospective homeowners are going to be facing down the line and probably already are running into it right now. But I did read something in the article that stood out to me that even though that, they won't insure it, there is a California program that allows for you to still go through them. But at the same time, it will come at a higher cost. It does get pretty expensive, but there is solutions for, to get it insured. It's just going to cost a pretty penny.
There is, just like everything else is changing in the market, right? Inflation, everything that's going on. Before we used to see, like if we had a purchase price of like 600, so we would put like 20% usually is the rule of thumb, but I would always use like 75, 85. Now I am missing what that is. So it's hard to pre-qualify people right now based on just, it's a sales price, so it's going to be that. Like now we're trying to say maybe it's more like $150, $200.
And it's a $500 house.
You were here in Eastlake. Yeah, it's like, you're in a fire zone. But there's just small bushes around. You're like, wait a minute, I know my home, I know my area. Like, how is that considered a high brush area, fire brush area? It's like, it just doesn't make any sense.
Yeah, and I know it's specifically to our neighborhood. It has to do with the general proximity to the wildlife preserve and the park that's like going to never be developed. But yeah, it just happens to be close enough, right? And then, you go a little bit west of where we're at now, and you get towards like the Terra Nova area, Rancho Del Rey, and there's canyons right there by East J Street, and that is considered. Your backyard is abuts a canyon, which is all just brush and shrub, and so there's a lot of that I've heard from my friends in insurance to say, we just don't even do it. We can't do it. Like we literally go to Google Maps, we look up the address. We go, you're next to the canyon. Yeah, sorry, we can't insure your house. Like so now you have like Google Maps and the person deciding if you can get insurance or not.
So now when we search for homes, we search for canyons.
Or no, we can't search for canyons. We're not going to get insurance.
Well, that's what we say. We search for canyons. To not be around that home.
Avoid that.
Avoid it.
One interesting thing that I read as well was that if the company like a State Farm or Allstate can insure it, it goes down to the state, right? So then where does the money come from? The state, obviously, from the people that pay taxes. So how do you guys feel about taxpayers, basically footing the bill for the insurance policies in some sort of way?
It's actually a little bit of both. So it's not just taxpayers. Also, it's the providers in the state of California that do write insurance. There's a part of that goes to that coffer, if you will. So that the California Fair program is a mix of money. It's not just taxpayer money and state money necessarily. It is actually money that's peeled off from the insurance carriers that are providing insurance in California. Thus, also begs the question: if they're leaving California, that's less people contributing to the fair coffer, which means that the fair expense will probably go higher if they are going to continue saying these things about the communities being at highest risk because of whatever it is, whether it's wildfire or being by coastline or floodplains or whatever. That is an issue, and then California Fair is only going to get more expensive and not less expensive. So this is not only a problem right now, but it's a potential problem later. Policy might change some of it. The vacancy of insurance is going to make that a little bit more even difficult, and we're not out of the woods. So.
We're not out of the woods.
We're not out of the woods. By far.
We may not want woods anymore.
Yeah.
Those things catch on fire.
Please don't make any forest references on your show about insurance. So one of the things that they're posing here as some potential things that could help insurance policies or help bring insurers back is adopting more stringent building codes and safety standards, which immediately I'm like, okay, well, that just sounds like it costs more, which again, okay, maybe it does, but if that brings them back, it brings them back. Yeah. They have to maybe price risk into home sales, but that incomes DTI. And then making risk information accessible and understandable, and making people like understand what the real impact of a catastrophic event is.
Yeah.
And, I get that part, but I'm going to say this. Have you guys heard this before? We know a thing or two because we've seen a thing or two.
Yeah.
Right? You know that? Okay. So here's the thing. For years, maybe even decades, insurance companies have marketed to people as, oh, we're going to give you the warm and fuzzies. We got you covered. Yeah. So now to propose that maybe giving them more information about the outcome of a catastrophic event, it's not going to necessarily help people, because we've been accustomed and conditioned, I would say, that we're supposed to just trust that our policy is there and it's going to help us. And most people don't even read the terms and conditions of our policy.
There's that key word again, condition.
Condition.
We just keep getting conditioned.
It's funny that you bring that up, because you said people don't read their policies. Yeah, I had a client, hey, can you read my policy? What does a dwelling mean? I'm not going to say any names, but, it just goes to show you that the average consumer doesn't know what they don't know. So it's even more important to, tie your wraps with somebody that has that knowledge, that has the experience, has gone through similar situations, because they could be your eyes in the ground and actually guide you in a way that, they're talking from experience, not just theory and ideas.
Yeah. Always. Or if you have other friends that are homeowners and maybe understand, hey, ¿qué pasó? Like, hey, do you know your insurance? Y ¿Cómo te va ahí? Stuff 100%. Like that. Absolutely.
So what would you guys think about developers, builders, and investors saying about this? Switching it up as far as being able to, like, for example, they mentioned maybe relocate and, build elsewhere, but how would you feel if you're a developer and you're like, well, no, I understand that, but this is the best place based on, the landscape of the area, the prices, and how do you think they're going to feel if things change for them?
No.
I mean, it's always going to be that way, whether they're in a dense area or they're not in a dense area, or if it's rural. Okay, there's an issue of like demand, number one, and number two, if there's demand in an area, but we have to make compromises on safety, then that's another issue. Like if we can only build next to the preservation that is all wildlife preserve, and we can go right up to it, well, then that then is asking people that have demand for housing to accept that, which they will, because they need to live somewhere. But then that transfers that risk onto the homeowner, and the homeowner is relying on the insurance company to help share some of that risk. I'll give you money every month that in the event I lose my house, whatever, that risk will be covered. The reinsurers are covering the insurance companies.
Here we go.
And now the insurance company's like, yeah, I don't know that we want to do that.
Yeah.
So it's all these pieces together. It's not just one standalone thing, because they are interconnected. And it all starts upstream, of course, of what insurance companies want to offer and what's going to make the money.
And again, it's all the rising cost of construction, cost of labor. We already see our gas prices. So all these things have some correlation to go with it.
So lumber shows up on trucks. Trucks use diesel.
Yeah.
All right, guys. Limited home insurance options in California as major carriers pull back. We mentioned already on the show, Allstate and State Farm are not currently accepting new applications to California. Correct. But I mean, here's what I'm going to ask: when will people start blaming the state? At what point do you think people start blaming the state and not just the insurance carriers themselves?
This is just crazy to hear this. Like I never thought in a wild years, in all my 17 years in this industry, that I ever hear we have an issue with insurance your home. Like this is just crazy to even have this conversation. But again, it all goes to the state level. It goes to everything that's going on. I just don't get it.
To me, it kind of feels like there's a lot of finger pointing going around.
Yeah, absolutely.
Because it's like, but I also understand the mechanics of it. When we're talking about having to basically petition to raise rates a certain amount on premiums, not rates, so raise premiums a certain amount, but having to get permission from the state commissioner so that we're not gouging people. But then like, fine, you don't want to play along? We'll just leave. Yeah. Well, then now the state goes, okay, well, wait a minute. How do we make adjustments to that so we can allow people to have coverage? That's why I'm asking the question. When are people going to get upset and go, hey, someone needs to come to the plate and help us with this? Because the California home prices being so expensive, rebuild costs being so expensive, who is sitting on $400,000 right now to rebuild their house if they don't have insurance? Nobody. Who is it? It's nobody. And if you don't have the California Fair Plan and you don't have insurance, guess what? You're SOL. That's what this looks like.
So Prop 103 was basically in place to help homeowners basically protect against insurance and rising up prices.
Correct.
I feel that now they need to either eradicate that or fix it to be able to then now help homeowners, because the protection, obviously it worked, they got protected, so on. But now we need help. Now homeowners need help from the from the state as much as they need from the companies. And I feel that there's a middle ground where there could be something done. And I don't know about policies enough to speak on it, but I know that there's some sort of understanding and some sort of way or procedures that can be done where they could raise up the price, but at the same time, the government can help in some sort of way alleviate that rise in insurance policy premiums.
And right now, in the recording of this show, we are in October of 2023, and between now and whenever they get this figured out, there is going to be this no man's land where people will have catastrophic loss. They do not have insurance. They're going to lose their house, or they're going to lose their structures on their property, and there will be no solution for them. Yeah. Will there be a retroactive solution? Maybe, but that is way beyond what are the core things that need to be fixed as far as functionality.
Yeah.
In the law and the policy and the premium and getting insurers re-incentivized to come back to California. I think that's the issue. And the other thing is, I'm not necessarily convinced yet that the people who have stayed in California are going to be able to absorb that 21% vacancy that Allstate Farmers and State Farm is causing by all them leaving. Yeah. I don't know who is big enough to take that, or even has that risk tolerance or big enough, cash purse to absorb all that business.
That's another conversation there.
Yeah. And I guess one of the biggest things is that they can't incorporate the cost of the fire into the policy. So therefore, it makes it harder for them to dictate how much it's going to cost, which I think right there in that sense lies the solution of being able to build it into the policy already. But then again, Prop 103 stands in the way. So, hey, what are we doing here, California?
Well, and at this point, it's estimated that there's 2 million homes in California that are considered at high or extreme risk. Wow. So even if you have a small percentage of those homes that have some sort of catastrophic loss, even not 10%, that'd be like 200,000, but even 1% is still 20,000 homes. 0.5% is 10,000 homes. 0.25% is 5,000 homes. Think about 5,000 people you may know, or you may not even know 5,000, just displaced, don't have insurance, and cannot even afford to rebuild their place. This is going to be a problem for people, no matter which way you slice it.
Yeah.
Oh, 100%.
So, we have this issue where material costs have increased as much as 40% over the last couple of years. Memo, you're mentioning that their labor costs have increased. But, as an insurance company, if you're capped off that you can't raise premiums more than 7%, or you have to get it on an exception basis to raise it higher than that, it really isn't keeping up with inflation.
Yeah, exactly.
So what would you what would you say about that? Would you take that deal? You wouldn't take that deal, would you?
No, of course not.
I know you're too good.
Why would you?
No, you can't. No, you can't. And, talking about mitigation and some of these other things, like I hear all these references or these suggestions, and a lot of them just, to me, equal dollar signs. And I go, that's just going to cost more money. Yeah. But then eventually that gets to the consumer, and then the consumer's cash strapped, or maybe they can't qualify now or something like that. And that becomes the deterrent. And, this is all mixed in with real estate and mortgage, guys. For all of you watching that don't understand how mortgage real estate is connected to insurance, most lenders, or all lenders, are going to require that your house has property insurance on it, so that they'll finance your property.
Yeah, it's important. I mean, the banks, we want to be protected, right?
Yeah.
In case of fire, and the property just goes down. If you don't have insurance, then most people don't have a large piggy bank to go out there and reconstruct an $800,000 house.
And on that note, I just do want to say, there are still over 100 insurers still insuring homes in California. We're mentioning the big names because they're the big names, but there are a handful, more than 100 still, that are insuring in California. And some of the suggestions that we have on the show from this direct article is to, you're looking for insurance. Number 1, evaluate your needs. Number 2, make a list of priorities. And 3, gather quotes.
Yeah.
I mean, look, 100%. You might actually only get 1 or 2. Fine. Better 2 than none. Better 1 than none, in my opinion.
This is what the independent brokers are now coming more into. We're needed. They're going to be a lot more needed. They understand the area. Unlike the bigger companies, they just kind of go through the demographics and see, okay, here you go on the map. Where somebody like the smaller brokers, their boots on ground, they know their areas much better.
Yeah.
But again, these experiences, we had a client that went shopping and couldn't get an insurance quote anywhere. And the normal person that I actually refer them to, she had to go back and ask corporate to see, hey, can we get the insurance quote? It took literally a week to get a quote.
I heard about that. I heard about that from a friend of mine too. Remember, we used to be able to get like the same day policy, and it's not that way anymore. It's not even like next day in some cases.
Yeah. I asked one of our insurance partners. He told me, hey, it's taking a little bit over a week, and this time they went as far as to ask me. Last time the roof got replaced, a lot of specific things that usually they don't ask, but now everything mattered, and they clearly specified, hey, all these questions we're asking detailed because it matters and it will help bring the price of the premium because it is expensive. Everything counts right now as far as that.
And I think that points to something else that is coming out of this, which is, it is a heavily data dependent system and heavily data reliant in order to make appropriate decisions on risk assessment and also cost analysis in order to know where margins are, what's going to cost, and where are the threats. Where are the threats, and identifying that even at the most granular of all levels. So
yeah, exactly. So one of the good things is be prepared. They're saying now be prepared to pay higher premiums. So here goes that word again, conditioning. Conditioning. We're trying to get people conditioned out to understand the new norm.
Yep.
Just like aliens.
Yeah.
Yep. You guys, I want to tie these last two together because they have to do with policy. So the two articles are California lawmakers failed to fix the insurance market. So what comes next? And then we're going to pair that with senators take up looming insurance crisis as policy issuers flee Florida and California. So, right out the gate, California has had a history of fire seasons where, referenced here was, 2017 and 18 wiped out decades of profit, and insurance companies began dropping tens of thousands of customers by refusing to renew. Which is technically not dropping, just failure to renew, but basically they don't have insurance. So, they're citing that it's become too expensive to operate in California, high cost of rebuilding, reinsurance issues.
State laws.
State laws. We can't let them off the hook either. But look, policy takes time to do. And I think that is my number one concern because there's a part of this where I have heard that certain people in positions of power want this to be a political win in addition to actually helping the people as well. And so these things not only need to be in place, but then you have to let them take place so that you can determine whether or not you've been successful in the policy or not. So it might seem like a win on the surface when it happens, and then you got to actually see if it actually gets to be a win long term.
Yep.
Well, right here it says when you can't make profit, you don't stay in those states. So,
that's right.
There it goes. You understand that they're not making the money, and it's actually costing them more money to operate in here. So therefore, they rather just pull the plug, take a loss because they know down the line it's probably going to be a greater loss if they have to pay out all those policies that do come up once we hit that fire season or any natural disaster come our way.
Yeah, right now with global warming, like they say, we're having everything. Water levels rising, more hurricanes in Florida, more wildfires because it's hotter, so it's like we're starting to see a lot more catastrophes happening.
Yep.
Yeah. And, one of the things that is challenging in this is because the issues are complex and the solutions are also complex. Yeah. And it has to be like politically convenient and also appetizing to the business. I think it's kind of dumb, honestly, but I'm not in this business. This is not what we do, but it does affect us. And, once again, here we are talking about something where there will be some people who can afford and some people who cannot. Just like we talked about, like high price homes, mid price, and low price homes, and access to opportunities. You also have some people kind of, I don't know if it's saber rattling, but they're basically saying, and they're kind of like trying to ring the warning bell here to say that like low income policyholders are probably going to be the ones left out first.
Of course.
Yeah, and that's 100%. That's unfortunate. Despite the state's efforts or even the insurance company's efforts to try to provide accessible insurance premiums, if all those factors we've talked about in the show create just additional expense on the insurer, then that policy premium is going to be high, and that will unfortunately hurt some people because there's going to be loss that they have.
Unreal.
Yeah,
it's just unreal.
Yep. I know that I'll share a personal story really quick and unrelated to property, but in my auto policy, I literally last week got an email that said, your policy has now gone up to this amount. The difference from my previous amount to my new amount was 38% higher every single month. I have had no new accidents, no new tickets, no new points, no new issues, no new cars, no new drivers, and we're older. So it is going to start rippling into other things is my point.
Of course, we use diesel to bring in those tires. We, bring the metal in over here in case your car gets in an accident. They're going to have to replace it with something else. So there's that cost. We're starting to see everything just increasing because there's a cost to everything that we use on a daily basis. I
feel like California is like a boat, and the boat has holes, and the holes are starting to get pierced with water, and we're starting to sink here.
Yeah.
So I think it's I just come to think like, well, if we know that there's problems, what solutions are we taking to make these better policies for people, or just more accessible for people to be able to want to live in California, be able to comfortably have a house and say if it falls down, I know that I'm paying my premium, which is what I've transferred the risk over to say, hey, if I can't make the payment because my house burned down, then you guys step in.
And we already know, I mean, when you do some type of policy making, it's going to take time.
Yeah.
So that's a great analogy. You know, the boat has so many holes. We're trying to cover one so quick, but
other ones are going to pierce through.
Exactly.
There's going to get water's going to get into the boat, basically.
Correct.
Is what we're saying.
Yeah, it's a great analogy because it is a situation we're facing right now. We're going to have to kind of bail ourselves out for a little bit, or some people are going to have to, but eventually policymakers, insurers, and I'll say industry groups are going to have to come together and get creative. And we talked about creativity in the mortgage market earlier this year when we sat around this table and we said, you're going to start seeing creativity come out of the mortgage market in the state of California because there has to be solutions where there's vacancies. Someone has to come in with an idea, a program, or a solution that will serve the communities and serve neighborhoods and people. And I think this is going to be a little bit of the same. It's obviously completely different industry and different problem, but I think you're going to see some of that creativity come out of this because it's going to be necessary. We will not have a solution without any creativity moving forward for this.
And it just goes back to everything, price stability, bringing prices down and trying to get everything to be affordable. And, it's not just in financing, it's everywhere.
I mean, there's good news into everything, right? So we just got to prepare. The good thing is there is independent brokerages that are here in town that you can work with. And obviously the main thing that we talk about this, it's very important also. We have so many personal stories to share. You know, as a matter of fact, I like to share one. One of my clients who purchased a home a few years back gave me a call. Her house burned down. Right. And so it burned down to like the foundation. And one of the things she did was she did buy a safe. You know, she had a gun. She put all her stuff in there. But remember, when the fire department's there, they're using all the water hose. Everything's getting wet. Well, all the paperwork that was in there, the safe wasn't waterproof. Fireproof, but not waterproof. So it was a mess in there. So one of the things that she gave me advice on is she says, take video of all your personal belongings. Take pictures of all your personal belongings. Make sure you buy a safe, right? Waterproof and fireproof. And there is. Yeah. There is. And so one of the things she had in there was like her jewelry appraisals. Those are gone. So like those little things that are very important that you have to give to your insurance provider and say, hey, this was part of my policy. Here's the value of that. Well, now can't use that.
Wow, that's a really good suggestion. It's funny you brought that up because I had been told that before, and I was like, that's a really great idea. I'm going to do that. And then I went to something else, and I didn't do that. But I've got a safe at home. I got a bunch of important documents in there. And I got to go back and do that. So thank you for bringing that up on the show.
Because those things don't happen to us, right?
Well, yeah, that's the kind of stuff that happens to other people. Those are the famous last words, right, for any situation.
Or if you're a millennial, just do a Dropbox and put all your stuff.
Yeah, you can put your personal jewelry in a Dropbox. Yeah, sure.
Oh no, just the receipts.
Your appraisals on Dropbox.
Just scan them with your iPhone.
Yeah, there's usually some paperwork that you have to kind of throw in there very quick that you forget, what have you. You know. The other suggestion was, well, why don't you just put them in safe deposit in the bank? But then we saw what happened in banks a few years back when they were getting caught on fire. People were just going over there and blazing them up. So who knows? Where do you really put your secure stuff?
Yeah,
you take it with you, because then you get pickpocketed.
Yeah. All right, guys. Well, thanks again for a good conversation. I want you to tell me what you like best about the show.
What I like best about the show is that there's always solutions. There's always solutions. Yeah, things are going to get more expensive. Milk's more expensive, gas more expensive, but yet we still find a way to make it happen and provide it for our family. So I feel that like always, our message is always to let you guys know that there's always solutions. There's always a way. It's just you have to really put your thought into it and think yourself out of it.
Yeah.
How about you, Memo?
I was actually going to do that. It's just all about your solutions, right? You got to find your solutions, and the way to find those solutions by surrounding yourself with the right people.
Yeah.
You'll always hear what they have to say, what experiences they're in, and then that way that puts you in a better place.
100%.
So always solution driven. I like that.
That's awesome. Good, guys. My favorite part of the show today was learning that there are still over 100 insurers in the state of California. So you still have options and solutions like the guys are mentioning for your property and casualty needs, for your property, I should say, not property casualty, but for your property. I'm so used to saying P&C. Yeah. So for your property needs. And also I think that just because we see the big three, if you will, leaving California, that does not mean that you have been abandoned. So make sure you stay close to us. You stay close to your realtor. You stay close to people in your your life that are your insurers and people that know them, because they will have solutions for you. We have solutions for you as well. And even if you have to use the California Fair Plan, it is there for this reason. Use it while you can and use it while you can get it. So thank you guys for another great show. And thank you for watching the Mortgage Heroes podcast. If you're watching on YouTube, make sure you like the channel, subscribe to the channel, like the video, and turn on notifications so you get every episode. And if you're listening to us today on Apple and Google, thank you so much for listening. And remember to turn on direct downloads so you get every episode right when it airs. Thanks again for watching, and we'll see you again next week.
Bye, guys.